Hey, everybody. Welcome to SPAC's Attack. No, your eyes do not deceive you. Obviously, I am not Mitch Hoch. My name is Spencer Israel. I'm the producer of Pre-Market Prep, which airs every morning right here on Benzinga's YouTube channel from 8 to 9 a.m. Mitch is off today, celebrating his birthday, and tomorrow as well. So for some reason, I'm not really sure why he decided to ask me to fill in for him. So I'm driving the bus. We're going off-roading. It's going to be a little hectic, but we're going to roll with it. I've got my man here, Chris Katje. Chris is suffering from some internet issues at the moment, so we're going to roll with the punches here, and I hope we can do this thing. I hope we can get some information to you. But Chris, can you even hear me, first of all?
I can hear you. We okay. Got internet. We're ready to go.
Okay, we got internet. We're ready to go. Let's go into some headlines. What do you got for us?
All right, guys. So headlines today. We did have one new deal announced this morning. So this is symbol STICU. So Bark is going public via Northern Star Acquisition Corp. This is a fast deal for the SPAC world since this company is still trading as units and has not split into common shares and warrants yet. Deal is being done at an enterprise value of $1.6 billion. Those units are now expected to split anytime starting tomorrow. Current SPAC shareholders will own 12.6% of the new company. Each of those units does include 1/3 of a warrant and one common share. This deal is expected to close in the second quarter of 2021, with the new company trading under the symbol BARK on the New York Stock Exchange. So this is a company focused on dogs. They serve over 1 million dogs monthly. They use an omni-channel sales strategy with their BarkBox subscription program and large retail partnerships. So they're well positioned to be the category leader in 4 categories of fun, food, home, and health. They have partnerships with Amazon, Target, Petco, PetSmart, and Costco. So over 23,000 stores you can find Bark products along with that monthly subscription plan. The pet industry is worth $96 billion in 2019 and expected to grow. Amazon's dog category alone is $4.3 billion in annual sales. So that monthly subscription offering of BarkBox has really started to ramp up. So in 2019, 618,000 members, 2019, 663,000, and then the last fiscal 2021 year, monthly subscribers totaled 1.05 million customers. So altogether, they have over 6.5 million customers and 11 million point of contacts. Social media following is over 8.5 million people. So they have a strong reach, which allows them to introduce new products and segments. So that Bark Home was launched in 2019, Bark Bright in 2020, and Bark Eats also in 2020. So they think that these products are going to offer additional growth with the food market worth $24.7 billion for pets, and then also that fast growth of pet insurance offerings, putting a focus on health and wellness. So they cross-sell, so they have an add to box segment with BarkBox where people can then, choose more options, and they really see that driving revenue in the future. So fiscal 2021 revenue is estimated to be $365 million with 60% gross margins. That would be 65% year-over-year growth. And then going forward, they see $516 million and $706 million for the next 2 fiscal years. So their competitors are Chewy, Freshpet, and Trupanion.
And we lost Chris. It took only, a couple of minutes?
For Chewy.
Okay, we got your back.
Sorry,
here.
What was that?
We lost you for a second, but we got you back.
13 point. So all 3 competitors mentioned have seen share prices rise over 100% in 2020, and Chewy leads the way with 224% year-to-date increase in share value. Those shares were up 27% early.
All right. So we lost Chris. We're going to get him back. There's some questions in there about how Bark compares to Chewy. BarkBox, as I understand it, is only for dogs. And I don't know much about the financials. Chris, are you back? Let's see if we have Chris back here. Of course, this happens the one day Mitch is out. Chris, do we have you back here?
Can you hear me?
Yeah, I hear you. Can you hear me?
Where did I cut out at? Where did I cut out at? Where should we start?
We're talking about their competitors. We got Chewy. Let's start with there. Okay, moving on. The one day Mitch is not here, literally, we were all good until about 10 minutes ago. Chris's internet just like completely conked out on us. Chris, if you can hear me, put your like thumb up or something so I know that you're like understanding what I'm saying.
Can you hear me?
Okay, yeah, I got you. We're good. Tell us about BarkBox's competitors.
Okay. So this values Bark at 3.5 times estimated 2021 revenue. So that compares to multiples of 4.4 times for Chewy, 13.5 times for Freshpet, and 6.5 times for Trupanion. So all three of those competitors mentioned have seen shares increase over 100% in 2020, with Chewy leading the way with a 224% year-to-date increase in share value. Northern Star SPAC units were up 27% earlier today. Now a little bit lower than that, but definitely a hot one to watch in that pet market. So hopefully everyone can hear me now. So we'll keep going here on headlines. So next I have FEAC is now going to be traded as Skills, SKLZ. So that vote on the merger was approved. So remember, this is a pure play gaming company that allows users to wager against each other. We profiled this company on the show when we talked to Will Hershey from Roundhill Investments. So that SPAC was included in both the bets and nerd ETFs with its exposure to gaming and sports betting. And then speaking of sports betting, we have DraftKings, and then DMYT and DMYD and LCA. So all these gambling and sports betting stocks had a move yesterday. There was some headlines. So the New York governor, Andrew Cuomo, said sports betting could be considered for the state's $50 billion shortfall. He was long seen as the roadblock in the state in passing that legislation for sports betting. So his comments are pretty positive here. And then also the recent record set by neighboring New Jersey. We could see New York becoming the big story in sports betting in the first quarter of 2021. And then also remember that LCA is nearing that merger vote date. So those shares are up on that news as well. We did have a new SPAC ETF launched yesterday. So this is going to be SPCX. And unlike the last SPAC ETF that we saw, this one is actively managed. So it is going to, constantly be looking for new SPACs and trading those pre-deal names. So I talked to the founder last night, and he said they're betting on the management teams. So the top holding there is CCIV. And then they also have the other Bill Foley WPF SPAC in the top holdings. Of course, we know Bill Foley is taking PaySafe public with BFT. And then also IPOF and IPOE, both Chamath SPACs, are included in the top 10 holdings. So clearly a bet on the management teams here. Next up, we have Hyliion, HYLN. So this company had a good Wednesday yesterday, up 7% on that Barclays mention. And then we're up again today. Disclosure, I am still long shares here. It was nice to see Barclays, kind of dive into that name. As we've talked before, hasn't been a lot of new deals or new announcements from that company. Then turning to IPOs quick, we had symbol WISH. This is Context Logic, the parent company of Wish, a Chinese e-commerce company. They completed their IPO. So shares priced at $24 and opened for trading at $22 yesterday. And then shares closed about at $20.05. We can dive into that one more when we pull up some charts later on. We have MP. So MP Materials CEO James Litinsky was on Mad Money with Jim Cramer last night. Shares were up 10% yesterday ahead of the show, picked up another 4% after hours, and then they are up big this morning. Litinsky called the company a picks and shovel play, saying they win no matter who the top EV companies are. Remember, we had Litinsky on the show last month. So if you didn't see that interview, be sure to go back and check it out and hear some of his commentary on rare earth mining and also how they will hopefully be selling to companies like Tesla direct in the future. NPA was one of the new deals announced yesterday. Company is merging with AST, a space mobile company. Shares ended the day up double digits, 11% yesterday. HCAC, shares of the company merging with Canoe, were up 11% yesterday. Roth came out with a $30 price target, so that one did see some action in the trading session yesterday. And then a couple dates to add to the calendar now. So GHIV, which is merging with United Wholesale Mortgage in the largest SPAC deal, set their vote date for January 20th. And then LOAK, which is a pharma SPAC deal, has their vote set for December 28th. And then speaking of dates, just want to highlight again some upcoming deals that we have here. So votes are expected today for IPOB in that merger with Opendoor, and then also SAMA in that vote with Clever Leaves, a cannabis company. And then tomorrow we have the LCA vote for Golden Nugget Online. And then next week already on Monday, we have PIC voting on that merger with XL Fleet. Disclosure, I am still long shares of PIC. So lots of exciting deals with votes happening today, tomorrow, and Monday. So that's it for headlines, Spencer.
All right, we made it through a segment. Look at that. It's so funny. I was telling them when you hopped off that we were all good until about 10:55, 10:56, and then all of a sudden you just like started lagging like crazy. So okay, looks like we've got everything worked out. I don't want to jinx anything.
Yeah, five minutes to showtime. I pulled the plug. So, but
yeah.
we're good now. So we got this.
All right, I just want to pull up my watch list. You know, this is not complete, but this is just SPACs that I have my radar on. A lot of these have upcoming deals or have been in the news of late. You can see here the obvious standout is STIC at the top, and I pulled the chart up before. You can see it's up 16% today. And again, that's the warrants. We're not even talking about the common. We're talking about the warrants. And then MP, as Chris mentioned, getting the old Mad Money pop. He has more influence than ever, it seems. So these are what stand out to me as far as SPACs moving today. Chris, can we talk about some of those headlines a little bit? Because going into this BarkBox thing, I mean, you noted how early it was, right? The SPAC itself is new. What do you make of that? What do you make of the fact that this deal got came together so quickly?
Yeah, so this one surprised me that it was this company here. Obviously, BarkBox has had strong brand awareness. I've heard about it for years. But yeah, this one still trades as units. It will split hopefully this week into those common shares. But yeah, it surprised me, when I looked up the ticker and it was still trading as units. I think a lot of these new SPACs, are really rushing to get deals done. And when they see, a target that they really like, they may just be, jumping in there. So the SPAC was led by John Ledecky, who owns the New York Islanders and the NHL. And then also the former editor at Hearst Magazines and Cosmopolitan. So a couple people there, with different backgrounds. I like the magazine background because maybe that helps, within that pet and consumer industry there. But yeah, I mean, the numbers look good for BarkBox. And, I think the pandemic has definitely shifted people to buying, pet products, pet food online, as we've seen with Chewy's impressive run. And then also, I think, them expanding into some of the pet insurance, pet care. They're even going after like pet dental. I think those are growing markets, and I think we may have seen a lot of people, adopt pets during the pandemic as well. So they may have rushed into this deal just because they see, the catalyst coming. So when this company's publicly traded and it starts, releasing some of those earnings from the pandemic, I mean, the numbers, they could just be, excellent here.
So, Chris, do you know what's going to happen when they split into the warrants and the common stock? Do you know how that works?
So yeah, so the units will split. So if you own one of those units now, you will get one common share and then a third of a warrant. So your best bet when you're buying the units is to buy in increments of 3, because then you get, a whole number of warrants. So then, those common shares, if they start trading tomorrow, they could see a lot of action just because of this deal being new. So that's the other thing that surprised me is, usually a lot of the retail investors don't get into the units. I mean, you can't even buy units on Robinhood or some of the other sites. So that's part of the reason this surprised me too, is because, the retail investors can't even really get into this name until they split. So we had a run up today, but when those split, if it's soon, we could see another run up in the common shares just based on that.
Yeah. Do you have a dog? And if so, do you use BarkBox?
I don't have a dog. My brother who lives with us, he has 3 cats. I grew up, we always had cats. My wife grew up with dogs. So we are in the can't decide on which pet we want boat right now. And I would like to wait until my kids are older and can help take care of the pets. But yeah, so what about you? What do you have for pets?
No pets. Never had a pet growing up. Only had fish.
Pets.
Don't you think though that like this, in some respects, this is like the best it gets for these kinds of companies? Everyone was forced to pivot to buying everything online, and of course, with everyone being stuck at home, adoptions are up this year. And don't you think that that creates sort of like this perfect environment where this year is not able to be replicated in the future? This is kind of like the perfect best case scenario for a company like BarkBox or even Chewy for that matter.
Yeah, and that's one of the things to watch is this, on the positive side, this could be the perfect time for them, perfect time to go public, perfect time to get this deal complete. On the flip side of that is what happens when we run against the comparables in a couple years. As I said, they had over 600,000 members the year before, and that quickly jumped to over 1 million. Whereas, before they were growing, less than 100,000 members a year for that subscription. So then to all of a sudden, add 400,000, subscribers, what happens when people aren't at home? Does that 1.05 million, does that number go down? I don't know. And I think maybe that's where they really need to focus on the growth in the retail channel, because maybe this isn't just about, online sales during the pandemic. And that could be one of their advantages over a company like Chewy, because BarkBox actually has, 23,000 retail stores with those Target, Costco deals in place. So that's something to watch too.
All right, let's go back to Hyliion. You mentioned that they got some positive commentary from Barclays yesterday. I'll pull the chart up here. This is one that you said you still own a piece. I was long this as well. Back, when did I buy this? $18 back in end of July. We had the CEO, Thomas Healy, on pre-market prep, and a couple of days later, I bought that. In my mind, it was a long-term investment. I liked what he had to say when I was doing my research, prior to the interview. Everything sounded great. It looked good, and it seemed like a better idea for a business as opposed to like a Nikola, for example. And then it ran up so much, and I couldn't help myself. I literally couldn't help myself. So I got out at like 38. So I well off the high there. And so now, I still like the company. It's come back this far. It's come back all the way down to $18, $17 now. I mean, what do you think here, Chris? Should I like nibble back in a little bit?
Yeah, I like this one. I still own shares. I'm with you. I sold some, in the 40s. I like Thomas Healy. I like this story. But I really think there needs to be more news from the company. We need to see more deals. So yesterday, our interview with Lightning E-Motors, he kind of talked about how Hyliion owns the Class 8 fleet electrification segment. They're focused there. So they do have a head start there. But I would like to see more deals announced from the company, because right now, we're just kind of trading, on the long-term, hope and, belief that it's going to be, a great growth company. So I would like to see more.
Yeah, I mean, it's basically back to where I bought it. Maybe I should just take a flyer on that one. Okay, let's go. Let's keep going here, Chris. Got a few more things I want to talk about, and one of them is this Bill Ackman IPO. I have been thinking about buying this. I've been saying it every day for the last 4 days. I've been thinking about buying this, and I haven't gotten around to it. Talk me in or talk me out of buying PSTH.
So PSTH, yeah, one of the hottest SPACs, biggest deal done. So Bill Ackman, huge name. And then you look at some of the unicorns this is attached to, Bloomberg, Airbnb at one point, Stripe. So, with the money involved, I think he's going to land a big name. And I think that's what everyone's betting on here. I do like Stripe as a possible, target. We see the fintech and online payment space, huge growth right now. The thing I don't love right now is, it's one thing to bet on the management team, but this is one that went public at 20, and we saw it, hit, over 27. It's back down to 25 now, but that's a decent size premium to where it started. So the other thing is, is everyone in this just waiting on the deal announcement? And when that deal announcement happens, do we see this spike up that first day and then immediately come crashing down because everyone who's in it, is going to sell? Or are people actually, betting on this for the long term, where they say, hey, whatever company Ackman lands, he's going to, bring his business insight and help with future growth. I'm a long-term believer in Ackman and the company. I tend to think it's, the other of that, where it's everyone's betting on a huge deal announcement and then could sell when this is announced. So I think you have to be careful. Now that it's back down to 25, if you look at that chart, that may be, one of the near-term bottoms there. If you see that volume on the bottom too, it's seen large inflows, into that name. There's some hedge funds and some asset managers now buying stakes in it, betting on Ackman as well. So I like the story, but I would just be careful, because I do think, you could see some large profit taking after that deal is announced.
Yeah, you're right. I think it really does come down to whether or not you trust Bill Ackman. And the fact that the SPAC is so large, there really are only a handful of companies that they can buy at a reasonable price, right? There was rumors that he had approached Airbnb, or that he had approached Robinhood. You mentioned Stripe. There's been a couple other names thrown out there, so we don't really know. But okay, I think you talked me into it. Like I said, I've been thinking about it. I've been all talk, no action all week. So I think I may, after we're done here, just go into my Fidelity account and just buy a couple of shares.
Yeah, and this is one of those SPACs where, for people that want exposure to the industry, this could be one of the, the ones to really, start with, because of that large name and the fact that it's going to be, it's going to be a large unicorn who most likely already has revenue. Whereas a lot of these EV SPACs we've seen, they're pre-revenue companies. You're trading at these billion-dollar valuations, on the future growth, where, I believe whoever Ackman lands, you're already going to have revenue. You're already going to have some decent multiples. And like you said, yeah, there's only a handful of names. I mean, and lately it's been Stripe, but we've also heard, Robinhood wants to IPO next year. That's a possibility. Coinbase is a name that gets thrown out that they're possibly looking. You know what I mean? So there's only so many names that this one can land. So, I think it's going to be a huge announcement when it happens. And obviously, along with the huge announcement comes the huge press coverage. We're going to hear about it on CNBC for days and days. So, you're going to have the catalyst there. It's just a matter of, how quickly do people sell off of the news.
Yeah. All right. And then I have one more thing before we go to some questions from our chat. There was a tweet here from this is from Carl Quintanilla on CNBC. He tweeted this I think Monday or Tuesday. This is from Goldman Sachs. Goldman Sachs pointing out that there are $61 billion in SPAC money currently looking for acquisition targets. And we know that they have that 2-year deadline, right? So that would mean in the next 1 to 2 years, companies, these SPACs would have to buy the amount of money that they would have to spend on these companies would equal the total enterprise value of all the SPAC deals in the last decade. There is just so much money out there. The logical conclusion is that they're gonna end up overpaying for some companies, right? There's gonna end up being some deals that are just massive overpays, and the company was never worth what the SPAC bought them for. You agree?
Yeah, and I think it's important to, kind of compare this to IPOs. With IPOs, we
Yeah.
see a similar thing where, some are good, some are bad. Ultimately, you're going to have some losers, you're going to have some big winners. I saw a comparison yesterday on Twitter as well, talking about, the dot-com boom, right, in the bubble. And, one of the companies that came out of that was Amazon. So obviously there was winners even in that dot-com bubble, whereas also there were a lot of losers. So how do you, kind of differentiate the winners from the losers? That may be where you look to the management team and, betting that they're going to make the smart deals. But we talk a lot here on the show about, the electric vehicle SPACs. And at the end of the day, some of those aren't going to be winners. There's a lot of hope, but you can't own every SPAC, so you have to be careful, in which ones you get involved with. And with that many out there, I do think we need to see the volume of new SPACs start to drop next year, because there are just so many offerings right now where yes, you are going to see some overpaying on deals just to get deals done before your competitors.
I would argue most of those companies didn't succeed. And with Amazon, you had to stomach several, like 80, 90% drawdowns. So it's hard, man. It ain't easy. This is why, honestly, I may just close my eyes and buy that SPAC ETF that you talked about earlier, right? SPCX. I love ETFs. I'm an ETF evangelist. I think they're like the greatest thing that ever happened to investing, or one of. Especially low-cost ETFs. So honestly, that may be the way to do it for me personally, right? Because I just don't have the stomach to buy these things and hold them with through a rally or through a drawdown. I just can't stomach it. All right, let's go to some questions from our chat. All right, Stephen Kelly wants your thoughts on BFT. Do you have any thoughts there?
Yeah, so BFT taking PaySafe public, from the day this deal was announced, I said, I like this one. PaySafe is huge in the, the iGaming space. They help power Roblox, Fortnite, some of the sports betting companies, with those online payments. I think we're going to see, extreme growth with some of those names mentioned. So I do like PaySafe. I see lots of comparisons to Square and PayPal. I don't necessarily agree with those because PaySafe, maybe isn't going to grow as fast as those companies. But I do like PaySafe and the long-term story here.
What about CGRO? See, I don't even know all these guys. Like, I'm going to you because I'm a follower. I'm more of a fan, and you know a lot more than I've never even heard of CGRO. Do you know that one? I don't even know that one.
Yeah, so CGRO is another LiDAR company. So again, LiDAR is all about, autonomous driving, electric vehicles. So this is Innoviz. The thing I like about this is, they really are starting to, ramp up the amount each vehicle is worth to the company. And the valuation on it was kind of in the middle compared to like Luminar and Velodyne. So there are going to be 4 publicly traded LiDAR companies, which is a lot compared to having none just a year ago. So I think we need to watch that. And then also, we're seeing like Intel maybe doing their own LiDAR, which, then that's a big name out there that maybe doesn't land, some of these deals with those LiDAR SPACs. So it's one I'm watching. I'm watching all the LiDAR ones. I owned Velodyne for a little while, but I have sold out of that one. That's the one I'd probably be watching is Velodyne. I think Luminar, the valuation is too high here, which Citron has also called out. So I would be careful with that one here.
I want to pull up a chart of this HCAC Hennessy again here because they are just selling. They're fading the rally. So you mentioned the rally yesterday, Chris. Was up what 9% yesterday? I don't know. It's whatever it was. It's down 9% today. Their vote is upcoming, right? It's in a couple of days.
Yeah, so all those profits yesterday are just, going away. Vote upcoming. They're supposed to be announcing a new vehicle platform here soon. This is one, again, in the electric vehicle space that, kind of is all about the future story. They do have some investment from some auto companies, so, strong relationships. But this one, it may be too high right now to get into.
Yeah. Okay, that was kind of it. That was for our list. We hit on a couple questions. Chris, do you have any final thoughts for us before I wrap this up?
No, I think that's it. We're seeing a couple big winners today, with MP up there and that BarkBox deal, but otherwise it looks like everything's, kind of starting to trade down here on the day and giving back some of those early gains. So, last Friday we got 2 new announcements, and we had 2 announcements last Thursday night. So maybe after 4 today, we'll see some new deals announced, and maybe some tomorrow morning. So, otherwise, again, those upcoming votes are the catalyst to watch today and tomorrow going into the weekend.
All right, I want to add that all the information from our broadcast, every broadcast at Benzinga, is for informational purposes, not for investing or trading advice. Chris, how did I do? Did I do okay for my first time?
You did awesome. I wish
Okay.
my internet would have done a little bit better, but
right.
yeah, it's great to have you on the show. It's great to have another set of opinions and asking questions. So yeah, let's do it again.
Right. It's what they say. They're calling this the crossover event of the week. That's what I've heard on the internet from at least one person.
Hey, that's right. We'll take it.
All right. Well, I'll be back with you guys tomorrow with Chris, of course. So I mentioned our disclosure. Hit that like button. Hit that subscribe button. Don't just hit it. Just smash it. Just smash the like button. We appreciate that. Everyone have a good rest of your day. And Chris and I will be back tomorrow, provided Chris has working internet.